If you don't know your real gross margin, then you're not creating a sustainable business model. And the reason is because your gross margin tells you if you're pricing your products at the right price, if you're buying your products and your cost of goods sold actually makes sense for the amount that you're selling it for, and if you're creating enough of a margin that you can now pay for all the rest of your operating expenses. If you don't understand that number, then you can't create a structure that actually will be able to continue going forward. So when you're looking at your gross margin, you need to think about it's your revenue minus your cost of goods sold. But are you including everything in the cost of goods sold that needs to be there? So you should be thinking about all the direct product costs, of course, anything related to the product itself, the shipping costs to get all those products to your warehouse. And then you also have to think about any variable costs that you incur in order to sell that product. So some people refer to that as cost of sales, but whether you're calling it cost of goods sold or cost of sales, you need to make sure that these expenses are also included in your gross margin calculation. And that is your merchant fees and your shipping costs to customers. Because when it comes to e-commerce, you can't sell products without both of these expenses. And that means that it increases your cost of sales, increases your cost of goods sold, and it needs to be taken into account to determine the pricing of your products. Because without that, your pricing model is not sustainable.